Did you know that every time you buy a stock, you're essentially betting on the future of some company out there? But don't worry, this isn't gambling. It's more like a high-stakes, sophisticated game of Monopoly where everyone's trying to buy up Boardwalk. Let's break down this financial fiesta known as the stock market. Picture this, a bustling marketplace where companies, instead of tomatoes or smartphones, are selling slices of themselves. These slices are called stocks or shares. When you buy a share, you're not just getting a piece of paper, you're becoming a part owner of that company. Fancy, right? Now, how does this market operate? Well, imagine the stock market as a giant auction house that never sleeps. Here, two types of people are constantly at play: the buyers, who want a piece of the action, and the sellers, who are ready to cash out. Their interactions determine the price of each stock. If more people want to buy than sell, prices go up. We call that demand. If more want to sell, prices drop. That's supply for you. Let's talk about some key players and terms you'll hear thrown around. Bull market. When the market is on a winning streak, everything's going up, and everyone feels like a genius for investing. The bulls are charging, and optimism is in the air. Bear market, the opposite. When stocks are tumbling down like dominoes, and investors are panicking, looking for the nearest exit. Bears are ruling with fear and pessimism. King stocks. As mentioned, these are the pieces of the company you can own. The more shares you have, the bigger your slice of the corporate pie. Dividends. Sometimes, if a company feels particularly generous or wants to keep you happy, they'll share their profits with you. This is like getting a little bonus for holding on to their stocks. Index. Think of this as a report card for the market or a particular sector. The most famous one, the S&P 500, tells you how the 500 largest companies in the US are doing. An IPO, initial public offering. This is the grand debut of a company in the stock market. It's like a company's coming out party where it offers shares to the public for the first time. Broker, your guide through this labyrinth. Brokers are the middlemen who execute your buy or sell orders. They can be human or, more commonly nowadays, an app on your phone. Pattern portfolio, your collection of investments. Diversify it, they say, because putting all your eggs in one basket could lead to a financial omelet you weren't planning on. Market cap, market capitalization. This is how we measure the size of companies. It's the total market value of all outstanding shares. A company with a high market cap is like the heavyweight champion of stocks. So, how do you play this game? First, decide what you're aiming for. Are you in for the long haul, hoping companies grow and your shares appreciate over time? Or are you more of a day trader, looking to make quick bucks off price movements? Here's a quick tip. Invest in what you understand. If you can't wrap your head around a company's business model, maybe give it a pass. Also, remember, the stock market isn't a get-rich-quick scheme. It's more like planting a garden. You need patience, good soil, research, and time for those investments to grow. But beware, the market can be as unpredictable as a plot twist in a soap opera. Prices can swing wildly due to news, economic reports, or even tweets from influential figures. That's why having a strategy like dollar-cost averaging, where you invest a fixed amount regularly, can help smooth out the bumps. So there you go, a crash course in the stock market. You're now equipped with the basics to start your investment journey. Remember, every big investor was once a beginner, staring at the market with wide-eyed wonder, or perhaps a bit of fear. But with knowledge, even the most complex markets can become your playground. Now go out there and make some smart bets.